Amid a multipolar world and societal shifts pulling at investors from all angles, where should smart money go? Is AI adoption still the critical driver of performance, dictating the flow of investments, the future of the jobs market, longevity, and changes in demographic preferences? Well, let's ask our first guest, Peter Lundgren. Peter, welcome to the show. Finally, we have you in the studio. Hi.
So good to be here. Thank you, Mimi.
All right, so we've seen quite an outperformance from Europe, from Japan, and the Kospi in Korea. Are you expecting this trend to continue, or do you see money flowing into other markets moving forward?
Yeah, so we still see money flowing out of the US. The story is simply not as hot as it's been for many years. And we favor, since years, we favor Southeast Asia a lot, and this is what we see continued. It will be the best destination, as we see it, when it comes to searching for return. Though lately, the past sort of, I'll say, 6 months, when I speak with the companies, and that is sort of where we see the first flows coming before the investors actually coming, they're looking more on Latin America. Growing flows are going to Latin America, and actually growing flows are going to Africa. It's our frontier markets for sure, and we can't just move a lot of money that way. But it's interesting. These are the first trends in that direction, actually.
Why Latin America and why Africa? What sort of opportunities are presented there?
Yeah, I see two different opportunities. If we see the big sort of free trade agreements, also between Asian countries and Latin America, and we are seeing the same signs between Europe and Latin America. So there will be more trade, simply as that. But we also see there's a growing demand, domestic demand in many countries in Latin America, and Africa is simply we're talking about frontier early stage markets that are simply taking off in an interesting way. Some of the countries are actually showing very good growth, but it's still, when we talk about absolute money, it's still a small story, because we simply can't move the whole savings into an African country.
So you're saying that, you know, in this narrative of U.S. versus the world, with America, a very protectionist Trump in America, it's forcing other countries to reconsider and to go for trade deals with other countries. I guess the big question is, what happens after Trump? I mean, after the protectionist policies end, will these new trade relationships be put back in the back burner, and America will be prioritized again? What happens after?
I would judge that almost regardless who would follow Trump, there has been some damage done, meaning that the free trade agreements between other countries and regions outside the US, they will consist and they will grow. So there is a long-term damage done to US. It can be something can be reverted, but that would simply be to lower the trade barriers again, to scale them back. We don't know, but as long as this goes on, we argue since actually Trump came into office that he is actually not ruining the economy, the domestic economy, but he is a value destructor for US, actually.
You think so?
Yeah.
Considering he has the MAGA, the Make America Great Again, and Wall Street seems to be reflecting the same thing.
Yeah. So it's okay to learn to live with Trump. Nothing problem there. And we also learned that there's a lot of noise from Trump. As the financial markets have learned to say, okay, there's a 24-hour sort of sort of comments coming out, but it's only a fraction of these comments that actually means a lot. So the art is, of course, to filter that out, but sort of moving the economy forward. We don't see any sort of good initiatives there. There'll probably be more public spending towards the midterm elections. But it's sort of like we see in other countries in the world that's trying to buy some votes. Yeah, we see it also here in the Asian region with handing out money. Yeah.
Speaking of Asia, you actually have an overweight rating towards China and ASEAN.
Yeah.
ASEAN as a whole, I mean, not all ASEAN economies or markets are created equal. So you must have favorites in ASEAN.
we do have favorites.
Are we a favorite?
Yeah, so actually the Philippines has been a long-term favorite with our company, together with Malaysia and Vietnam. They're of course in any country, also looking around the world, but also looking here and also in Philippines, things that could be much better. That would, if these things were fixed, it could lead to even more inflow from international investors. That is for sure. But we have favored Philippines for a long time.
And have we delivered, considering?
In general, yes.
In general?
Yeah, you can say one of the fair reasons is the high growth. I know that the GDP growth has slumped lately. That is, of course, up to the politicians and not the central bank to ensure that growth will return. And that we will have a closer look at to see what will happen from the government. And we are not looking for just spending, we are looking for intelligent spending and reform work to keep the economy on a good growth path and also keep up the mood among companies and householdings.
You did cite in a note that you're looking at policy uncertainty on the rise, threatening economic growth, and how seemingly local issues affect investor appetite towards Southeast Asia. You did talk about the Philippines being in the middle of a corruption scandal, Thailand's leadership in a constant flux, and waning trust towards the Prabowo government in Indonesia. So a lot of these things are really blamed. Can I say blamed on governance issues?
In Indonesia, yes. Partially in Philippines, we saw the peak in October last year. Thailand is a bit more complicated because it is also the political landscape is very different. Truckloads of different party factions, and they have difficulties creating a sustainable government. Yeah, but all the elections is not so many elections as we've seen in Thailand. Is simply unhealthy for democracy, and that's it generates different problems. But it generates, of course, a lack of leadership, political initiative, and then the economy suffers, and the family as a.
All right, you're overweight in China as well. Is it still the century of China?
For many reasons, it's still a good buy. Yeah, not a good buy,
because of
but
growth
a good
prospects or valuation.
Both. The growth prospects are, of course, softening a little bit all the time, but the growth we consider as being healthier than we were used to, actually. So it's more real growth we like. And
how do you make a distinction? Healthier, real growth that you like versus the previous numbers?
Private sector growth is what we like because this is where the healthy part of the economy is found. But we go years back, the growth in China was well known for being just public spending projects, as they just build some more bridges or build some more roads somewhere. This has gone. Chinese government has learned this is no good way. They fully understand how to support the household consumption and growth. There's no private sector officially in China still, but private enterprises still. So that's good, and we see the valuation as low still of Chinese companies, despite the market has gone up the past 1.5 years.
Well, Peter, other themes that you're watching out for this year would be global geopolitical concerns. You've got Russia and Ukraine, again, U.S. Venezuela, U.S. Greenland, Denmark, and the impact of these geopolitical stories to commodities. Are you a big believer in commodities, whether that's oil or the precious metals?
We certainly need them, so there's a fundamental demand. Oil is for us just extremely important factor to read the global economy. Gold is something very different. It's actually more for investment, extreme long-term investment. So if you look into, for our discussion here today, saying, okay, how do we judge the world? then we will look much more into oil actually.
Into oil.
And see how is the health in the market and how's that going. Geopolitically, we agree that there is, again, as we talked about before, so much noise that it is too much, but it's more noise than real threats. So if you ask me, I see the world as not as bad as we sort of have this, if we could say, a fear level. We are not as concerned as I think the general feeling among all of us and in the market. So to give an example, if you say, okay, the stock market is generally 10% lower due to sort of global geopolitics fear, we will say that is too much. It should maybe be minus 2 to 4%. So we're not so concerned as the rest of the world is. We actually see and look into the upsides and opportunities in the world once more.
All right, and I don't want to be a fear monger, but because of all of these geopolitical tensions, they're actually supporting investments in defense and intelligence sector.
Yeah.
That you believe in?
We do. And that is, of course, from a European perspective, we have been, from a country level, European countries has underinvested into defense for more than 20 years. In the trust there will never be a war anymore. All of a sudden there is a Putin. So yes, we have recognized that all European governments, they are really pushing money into the defense sector. So it's interesting for investors. If something is interesting for investors, we are there because it's our job to find good investments for investors. So we have opened 2 years ago. We opened an alternative investment fund. Only for defense, but solely for what we call high-tech defense. No weapons, no ammunition, no nuclear stuff.
So what's high-tech defense?
High-tech is everything else. That can be a lot of things as a really high-tech innovations. If I show you some of the investments we have, you will say this is like looking into a James Bond movie. It is fabulous, fantastic.
Amazing. All right. Final question, last two. What is your best performing fund under Lundgren's Capital? And how has it outperformed the broader markets? Just very quickly.
We need to mention our usage funds, China fund that got a LIBA award last year. And that means it's among one of the best in the world.
It's up by how much?
Quite a lot, actually. Maybe it was a 5-year period we were measured on. Depending a bit on the benchmark, maybe, I don't know, 5 to 7% per year, actually. And that's a lot, depending a bit who you compare to.
All right, so that's great news, and that gives you confidence, maybe, to push for your IPO.
Yeah, as we are looking, we have today shareholders in the mother company, Lundgren's Capital. And then, say, in 2 years' time, depending a bit on how we can
You're looking at a November 2027 IPO?
End of 2027, maybe early 2028. Let's say 24 months, whatever. To go to a growth exchange with our company. And are now, looking for new capital to make the move, new investors. Really interesting.
All right, exciting times ahead. Thank you so much, Peter, for joining us.